All right, a new year is the perfect time to get ahead of the game, right? We've waded through all the noise to bring you the must-know business briefing for January 2026. This is all about the key changes and deadlines you need on your radar, like right now. So let's jump in. This is really the big question, isn't it? What's 2026 going to look like for you? Is this the year you go for growth? Is it a time to consolidate and strengthen what you've already built? Or maybe a bit of both? The right answer really depends on having the right information, and that's exactly what we're here to break down for you. So we've got 4 key areas to cover in this briefing. First, we'll get into some strategic planning. Then we'll dive into some major tax changes that you'll definitely want to know about. After that, we've got some critical compliance deadlines and rules, and we'll wrap things up with a look at a brand new landmark law on digital assets. Okay, first things first, let's talk planning. The smartest way to plan for the year ahead is to really understand the year you've just come out of. So before we get all excited about 2026, let's take a quick look back at 2025. Just take a second and think about it. What was your biggest win in 2025? Maybe it was something totally unexpected, a new product that just took off, or a key client relationship that really blossomed. And on the flip side, what kept you up at night? Where did things feel the tightest? Look, if you felt the pressure, believe me, you were not alone. The whole economic environment was, well, unpredictable. For a lot of businesses, the headaches came down to these 4 things: rising costs just to keep the lights on, a real struggle to find staff with the right skills, customers changing what they want, and just that general economic uncertainty. So, with all that in mind, what's the plan for 2026? Broadly speaking, there are kind of 2 paths you can take. Are you in growth mode? Looking to find new customers, hire more people, invest in new tech? Or is this a year to consolidate, to double down on what's already working, get a little leaner, and just build on the resilience you've already got? Knowing which path you're on is absolutely the first step. Now let's switch gears and talk about something everyone loves: tax. Okay, there are 2 pretty major changes coming up that could hit your finances directly. And trust me, you're going to want to get ahead of them. First up is dividend tax. Starting in April 2026, both the ordinary and the upper rates are jumping by a full 2%. So if you're a company director who pays themselves through dividends, this is going to directly impact your take-home pay. It probably means it's time to have another look at your profit extraction strategy. And here's the real kicker. While those tax rates are going up, the amounts you can take home tax-free? Nope. That's not changing. It's staying frozen at a pretty tiny £500. So the bottom line is that more of your dividend income is going to be hit by these higher tax rates. Okay, the second big change is a new council tax surcharge, and this one is for high-value properties in England. The whole process is kicking off this year with consultations and new valuations for any property worth over £2 million. The tax itself won't actually take effect until April 2028, but the crucial thing to know is that it's based on fresh, current valuations, not those ancient council tax bands. Okay, section 3. We're shifting from long-term planning to the here and now, the things you absolutely have to do. These are the deadlines you can't move and the rules where the penalties can get pretty serious. Let's start with the big one, January 31st. That's the deadline for your self-assessment tax return. It's coming up fast, it is completely non-negotiable, and leaving it to the last minute is just a recipe for stress and, potential penalties. Next up, wages. It is so important to remember that these minimum and living wage rates are the law, and they apply to everyone you employ. It doesn't matter if they're full-time, part-time, temporary, or seasonal. There are absolutely no exceptions here. And if you think this is just some minor issue, think again. Last year, HMRC found over 25,000 workers who had been underpaid. This is not a rare thing. It's a really widespread problem, and it's something the regulators are actively looking for. And here's why you have to take it so seriously. Getting this wrong isn't just about paying back the money you owe. The penalties can be as high as 200% of the underpayment. That is a huge financial risk, not to mention the damage to your reputation if you get publicly named and shamed for it. For our final section, we're going to look ahead at a really interesting piece of legislation. It's a landmark law that's finally bringing UK law up to speed with modern technology, especially when it comes to digital assets like crypto. So here's the bottom line. A new law now officially says that things like cryptocurrency and NFTs are a form of personal property. Now, that might just sound like a small technical change, but believe me, the implications are massive. It basically pulls these assets out of a legal gray area and gives them the same kind of standing as your house or your car. So why does this matter so much? Well, this new legal certainty means you have much clearer rights if your digital assets are ever stolen. It means you can officially pass them on in a will, and it means they're formally recognized if a business goes into insolvency. It provides a solid legal foundation that just wasn't there before. So there you have it. We've talked planning, taxes, compliance, and this huge new law. All of these pieces are really designed to help you move your business forward. After a really tough 2025 that was all about resilience and survival for so many of us, the real question is, have you put the pieces in place to make 2026 the year your business truly thrives?